The broadcast is now starting. All attendees are in listen-only mode.
Take a deep breath first, because once you start recording, it's
All right,
it's going to capture everything.
All right, so we're recording. I want to welcome my friends Randy Gold and my new friend Charlene Higgs to the Bedrock Bookkeepers Do-It-Yourself Fundamentals of Bookkeeping and Business. Now, what we're going to do basically is go through the text, but I've created a condensed version just to make it, condense it into an hour. We don't have to go through every little detail that I have in the textbook. The textbook is for your own perusing and information. There is a lot more stuff in the textbook, obviously, that we're going to talk about here, but the truth is that there is so much to talk about. We can never really cover it all in a couple of seminars, a couple of webinars. So this is going to be sort of like an overview, but what I offered to you, obviously I offered the 30-minute free consultation. There's only a few people signed up for this, so what I'm going to offer to you, since you're one of the kind people that registered for this, next 30 days, you got any questions about any of this stuff, you can just call me, Skype me, ask me questions on Facebook, and I'll help you as much as I can.
Great.
The objective of this webinar in particular isn't really to teach you how to be a bookkeeper. It is, one of the lessons that I offer the people that I'm teaching bookkeeping. But really the objective of this for you as an entrepreneur is to give you an idea, an understanding of how bookkeeping really works, take the mystery and the fear out of it. I'm going to break it down to its core components so it doesn't seem so complicated. Now, you can take this information and actually start doing your own bookkeeping. I don't recommend any entrepreneur just do their own bookkeeping. What I recommend is that you do it. You can do it, but do it with somebody. Do it with a professional bookkeeper or somebody that's going to oversee you. Okay.
Hmm.
Uh, so that being said, let me go through a couple of the objectives that we're going to accomplish during these are 2 1-hour webinars. Okay, so one of the things I'm going to teach you is how to audit your records. I'm going to show you how to create a paperless document system where you'll be able to find any document in an instant. I'm going to show you how to keep your personal information private, extract the important financial data from your business, finally figure out what do you actually have to do in your bookkeeping process, and also to be able to identify mistakes in your bookkeeping system. Okay, I'm going to show you how to record your business transactions. Okay, and in recording them, I'm going to show you how they flow into your balance sheet and your profit and loss statement. Okay, and you're also going to learn how to reduce your mistakes, reduce, potential theft and unnecessary losses in your business. Okay, so what I promise you is that by the end of the course, you're going to know what you need to do legally and what you don't have to do legally. Because what I found is people that don't know usually either don't do anything or they do too much. So I'm going to show you the balance between that. I'm going to show you exactly where you start, okay? Because that's a mystery to people, because if you don't know where to start, you never start. Okay, I'm also going to show you what your options are as far as software and how, I'm going to address the 800-pound gorilla right now, the QuickBooks issue. And what people have to understand, what you have to understand, is that QuickBooks is not bookkeeping. QuickBooks is a tool. That's all it is. Just because you buy a version of QuickBooks doesn't mean that you're doing bookkeeping. The fact is that QuickBooks isn't even really a bookkeeping program. Okay? But what I've learned is, and especially now, most small businesses don't even need a program like QuickBooks. Most small businesses have so few transactions, you can get away with either an actual pencil and paper system or an Excel spreadsheet. So I'm going to show you what your options are with that. I'm going to help you understand where the numbers come from and how they get into your bookkeeping system. And finally, I think everybody wants to know, what do I actually have to keep and where do I keep it? Okay, so today what we're going to do, there's 12 chapters, and I think we're going to get through the first 5 of them. Okay, I'm going to go through a brief introduction. We're going to go through the time, health, and bookkeeping, the bookkeeping structure. I'm going to show you how to enter transactions, show you some accounting controls, reconciling accounts, how and why that's done. And we're going to end today with books and records. Exactly what are they? Why are all these people interested in them? Okay, now on Wednesday, I'm going to show you how to create an awesome paperless file system. And I call it awesome because if you're not paperless, you need to be, because it will save you an awesome amount of time. It's efficient. And one of the things that I've learned in business, one of the biggest hidden costs in a business is the time factor. we lose so much time and money. It's not the time factor isn't something that's going to show up on a line item on your P&L, but if you're not running a tight ship, you're going to be losing money. And I could tell you, I always use Larry Broughton as an example because he's a very successful entrepreneur. He's part of our group. And Larry will tell you that, most successful business owners will tell you that they know their numbers. Okay, and they know their numbers because they had a very efficient system to produce those numbers. Larry either owns or operates over 40 hotels, and yet he's still got time to come to our events. And believe me, he could probably ask his CFO for a P&L for all of his entities, and he'll have them in an hour. So we're going to talk about the paperless file system. Another issue that I find is big with entrepreneurs is the privacy issue and being in control. So we're going to talk about that on Wednesday. Payroll is huge. So I'm going to spend a good amount of time on payroll and payroll compliance, especially in today's government money hungry environment. We got to cover payroll issues. Like I said, we're going to talk about QuickBooks and other bookkeeping alternatives. Then we are going to get into the actual financial reports and how they flow into the tax returns, startup issues and answers, because at some point everybody was a startup, and I like to attract startups, people that haven't even started actually, either there are millions of businesses out there that haven't even started a business. They're just thinking about it. And I like to get them before they start making mistakes. So I'm going to cover some of those issues. And finally, everything comes down to your mindset. So we're going to talk about that. So let's get into this. What is this really about? It's about bookkeeping tells the story of your business. It's as simple as that. Okay, so if your books should plainly show to an outsider the status of your business. Okay, so I could go into any business, I believe, and within 20 minutes, I could tell you the health of this business. Okay, so when you're thinking about your bookkeeping, it's not all just numbers going all over the place. Your bookkeeping system, your accounting system should really tell the story of your business. Okay, and it tells the story of your business through numbers and documents. Okay, and that's it in a nutshell. Your books and records. When I was putting this together, I was putting up the records, and I'm like, pretty soon people aren't even going to know what the heck these are. They're antiques now. But why, who's interested in them? Why are they interested in them? And what's it all about? If you ever I don't want to get ahead of myself, but, there's the compliance side of books and records. Everybody that has a business has to file a tax return. I think that's common knowledge. And in order to file a tax return, you need to have books and records. So that's a given. But there's a much more important reason to have a good set of books and records, and that has to do with running your business. So when you have a good set of books and records, okay, when you're able to harness that flow of information, and that, business is fluid. It's changing with every transaction. Every time you ring up that cash register, every time you take money out of your account to buy something, every time you use your credit card, that information has to be flowing into your record keeping system. Okay? Now I'm going to show you that really when you break it down, if you have 5 transactions a month or if you have 1,000 transactions a month, you can still maintain control over that, because when you break it down, it's one transaction at a time. Okay, so now my experience is that the individuals, the entrepreneurs that are able to harness that flow of information, that's how we know what our business is. You're protecting yourself from unknown liabilities. Okay, you can create checks and balances. You open the door for scalability. Okay, you can manage your operations and your cash flow better, and hopefully you can sleep better. Okay, I'll tell you some of my real life experiences with idiotic entrepreneurs, like the trucking guy that woke up one day and decided that he needed a $250,000 truck. Forget about the fact that he was technically bankrupt, but that you don't make decisions on that. I look at bookkeeping and accounting as a science. Okay, we take all the emotion out of it. Business is emotional. Okay, I understand that. But if you take it from a scientific standpoint, I'm the bearer of bad news many times, because I have to tell the entrepreneur, the business owner, listen, you can't afford to buy that truck. I don't care how much you think you need it. You really need to pay your payroll taxes first. Okay, so now, books and records. Now, who is the authority? You would think it would be the IRS, right? Okay, so now this is directly from an IRS publication, and you should, I don't know if I sent this to you, but you should, if you don't have it, I can send it to you, just so you have it as a reference, material. But there's a publication, 583, which specifically says starting a business, keeping books and records. So the authority on keeping books and records, this is what they have to say. You should set up your record keeping system using an accounting method that clearly shows your income for your tax year. Yeah, and I could show you other references. They don't really give you any guidance. That's the point. All they say is that, listen, at the end of the year, when you do your tax return and we want to look at it, your records better back up those numbers. We're not going to tell you exactly how to back them up, but we just want you to know that you might have to produce those books and records. And in today's environment with technology and, like I said, the government's need for money, the amount of audits have gone up tenfold. And I'm not just talking about IRS audits. I'm talking about the state departments of labor, sales tax, even insurance companies. I don't know if you remember AIG getting bought by the federal government, but that's had a ripple effect on everybody's workers' comp and disability policies. Banks now are not just loaning money. They want you to dot all the I's and cross all the T's. So, all this stuff I've been asking my clients to do for 30 years, all of a sudden, there's other forces at play now. Before I wanted people to keep a good set of books and records because, how else are you going to run your business? Well, now you got the government intervention pushing that along. Okay, so chapter 1, we're going to talk about time, health, and how it relates to bookkeeping. Okay, because when I look at somebody's books, what I'm really looking at is the health of that business. What is the status of that business? What is their cash position? Are they in a position to pay their bills? Do they have enough cash to pay their payroll taxes and their employees? Okay, it's really a constant health checkup. Okay, and I don't know if anybody ever looked at time and health as being part of a bookkeeping process. But really, there's a reason why we're doing books. There's a lot of reasons. And if you want to do your books to run a good business and make a profit, okay, you want to constantly check on the health of your business. And that you have to do with a good proactive accountant. You need a solid bookkeeping system. And this is how businesses grow. Okay. Now, I understand that when a business first starts up, and we're going to cover this on Wednesday, there's a million things that you have to take care of, and all of them are very important. The first one to me is you got to make sure that you have revenue. If you don't have a product or service that you can sell, you don't even have a business. So bookkeeping is irrelevant then. Then the next thing is, can you sell it? You might have the greatest widget in the world, but if you're not selling it, again, there's no business. So marketing usually precedes bookkeeping. In fact, a lot of things precede bookkeeping. So the first thing, so people spend a lot of time on marketing, other things, and after a couple of years, they usually get back to the books, okay? That's not the best strategy, okay? I believe that you should start measuring where you are right from the beginning. Now, Charlene, can I ask you a question here?
Yes.
How long have you been in business?
Since January of 2007.
Okay, so you're in this for a couple of years now.
Yeah.
All right.
It's about 8 years.
Is that your first business?
Yes.
Okay. So do you remember back then, were you overwhelmed?
Yes.
Okay. So you can relate to some of this, right?
Oh, yeah.
How long, yeah, I don't know that much about you. I don't want to put you on the spot, so I'm just going to continue. But so the idea here is, the objective really is to be able to take a snapshot. Now, what I'm going to do here is I just have a quick example that's in your text, and it's just we're taking the stuff that you own, okay, making a list of it, totaling it up. So you could see here, this is a fictitious individual. This person had $400 in cash, some money in the bank, some investments, a car, and a house. So that's what they owned. Okay, now on the flip side is everything they owe. Credit cards, student loans, car loans, and a mortgage. Okay, so now what we do here is we total those up. You can see the total from what we own is 360. What we owe, and the difference is what we call a net worth. That's pretty simple, right? Everybody should have their own personal balance sheet. That's another thing that I should make clear here. All the stuff that I'm teaching you here doesn't only apply for a business, but it can also apply for your personal finances. Most small businesses, the business is the sole source of revenue and income for your personal finances. So what I do with my clients, what I ask them for is the same thing. I want a snapshot of where they stand. I want a budget, and I want to see if your business is producing enough revenue, enough net income for you to meet your personal budget. I can't tell you how many businesses I've seen that do not make enough money to cover their personal bills. And I'm not talking about for a little while. I'm talking about for 10, 15, 20 years. So these people are in business. They're tenacious, but they're also stupid. Because the reality is that they don't have a business that's going to support their lifestyle, and they're better off getting a job at Starbucks or something. And that's a literal fact, okay? I dropped a client last year that he was in business for 7 years, and the most he ever netted was $30,000. And he's putting in 12-hour days, 6 days a week. Okay? You can't, that's not a business, that's a hobby. He's below the poverty level. So we take a snapshot of where we stand personally, okay? And we turn that into business terms called assets, liabilities, and equity. Okay. This is a very simple balance sheet. Now let me explain something to you. This simple balance sheet can apply to Apple Computer. You could take Apple Computer's assets, liabilities, and equity and condense it down into 3 numbers. Okay. Now, what makes Apple Computer different than a candy store is that they have millions of transactions, probably billions of transactions. Okay. But I guarantee you, if you look at their financial statement, you can get 3 numbers: assets, liabilities, and equity. And that's the equation. It's simple. That's what we call a balance sheet. Any questions so far?
No.
Okay. So now this is where time starts playing a role. What we do in accounting is you see a balance sheet is a snapshot from a specific date. Okay, so in this example, we got a balance sheet from April 30th, 2015, and we're going to compare it to a year before. So now if you can see this, my assets went up by 100,000. My liabilities went down by 100,000. And my equity went up by 200,000. Okay, so in 2014, this company was technically bankrupt. They were in the red. They had a great year, and I'm going to show you what this really is. Because the difference between these two balance sheets are what we call the income statement. So your balance sheet is for a specific date, and an income statement is really the accounting for everything that happened in between those 2 dates. Now, income statements can get a little bit, and I don't know why this is, a balance sheet is always a balance sheet and there's always a date. But an income statement can be called an income statement for the 12 months ended. There's always a time period involved. It can be for the 1 month. Also, it's not always called an income statement. Sometimes it can be called a profit and loss statement or a revenue and expense statement. It doesn't matter what it's called. It's the results of the transactions that happen in between balance sheet dates. So this is the income statement for the 12 months in between April 2014 and April 2015. Okay. That's pretty simple. So now here's how time. I'm hearing some background noise. Somebody have some birds or something.
Phone's ringing. I'm sorry.
Ah, that's okay. Uh, you want to mute yourself? Unless
Oh,
if you have a question, then
how do I do that?
I have no idea.
Um,
You can leave it on. It's not that bad.
oh, I just figured it out.
Okay.
I figured it out.
Okay. So this is how time plays a role in your accounting. Now is the balance sheet. The past is your income statement. And the future is what we use to forecast what's going to happen. These three facets of accounting are key to running a successful business. Okay? So far, what I've showed you is what a balance sheet is, what an income statement is, and how how time plays a role in that. The next thing we're going to look at is where does all that stuff come from? That's all information that's compiled. Okay? Those numbers don't just appear. They are added, they're subtracted, they're multiplied, they're put into columns and totaled. And that might seem like a lot, but really you can break it down into just 6 simple categories. I don't care if you have 1,000,000 transactions or 3, they're all going to have the same 6 categories. So it's very easy to break this down into a system. Okay? So we're going to get more into this in the next chapter, but we're up to chapter 2 now, which is the categories and accounts. Okay, so all that information, the payee, the payor, the date, the amount, that all winds up into these 5 main categories. 3 of them are balance sheet and 2 of them are income statements. Okay, this is the crux of accounting. It's really not that complicated. I think what complicates it for everybody is, number one, it's numbers and people just get all discombobulated because it looks confusing. You know, I'm hoping my objective here, and I've done this a lot of times, is that by the time we get done with these 2 live sessions and you go through everything, you're going to say, this isn't that difficult. I'm going to become a bookkeeper. No, I'm kidding. That's actually happened with a couple of people, but that's not the objective. Okay, so moving on, you know, any bookkeeping system, any accounting system has to remain, if it's going to be good, solid, fluid system, what I like to create are seamless systems. In other words, a system that you don't even think that you're doing bookkeeping, you're just doing your business. So for instance, if you use PayPal and you get paid online, you know, you have a process, and we're going to go through that so that it just becomes the same as, you know, Charlene, I'm thinking you have a store and you probably go in and you set the alarm when you leave. When you come in, you open the door, you disable the alarm, you go through this routine and you probably don't even think about it. That's how your bookkeeping system should be. It should run fluidly like your business. Okay? So now we have those 5 top categories, okay? And everything else are subcategories, and sometimes there's subcategories. So all we're doing is we're taking each transaction with those 6 different factors, you know, the date, the account, the category, the payee, the payor. We're just taking that and placing them into the right category. So now I'm going to give you one of my favorite examples. When I was going to school, and I actually met Craig in between this, I was driving an ice cream truck because I was an entrepreneur, and in between semesters, I couldn't go and work for somebody. I had to be my own boss. So I rented an ice cream truck, and little did I know that that was my first actual bookkeeping experience, because this is what I did. I went out and I bought a petty cash journal, and I made a couple of columns. I said, oh, I want to keep track of my sales, my rent, my gas. What I was doing unknowingly was I was creating a chart of accounts. Okay, so now I have a standard chart of accounts that I utilize for all of my clients. That doesn't mean that they all have the same chart, but any client that has an operating account, it's going to be this. This is how we label it. Okay, so we have, if you see how this is laid out, and I can't get it all in one screen, but on the top are the assets. Okay, and you'll see that all the 1000s are assets. This is important. Your chart of accounts is the backbone of your bookkeeping system. If your chart of accounts is not organized and structured properly, everything else is going to be discombobulated. Okay, so this is extremely important. So now if you look at this, and you see how it's organized, not only is it in number order, it's in alphabetical order where I could do that. Okay, 4,000 is revenue. We get down to, if you're like in a construction business, you'll have, or a retail business, you'll have cost of goods sold. And then we get down to the regular expenses. So now you could see all of these are really sub-accounts of that expense category that I showed you in the first chapter. Okay, on the top, if you come down to, if we had all the amounts here, we come down, that's the total assets. Okay, and then we break down the assets into current assets, like cash and accounts receivable, fixed assets, then we have other assets. This is the, the structure of your bookkeeping system. And what I want you to, see here is that how these accounts will all flow through. If you have a tax return, if you have a corporate tax return or a partnership tax return, all you can, and I'm actually getting ahead of myself here, but this chart of accounts is what is really, it's in the background, combining everything, summarizing everything into your financial statements. Okay, so now also what I'm going to give you is a spreadsheet, which is going to have a couple, it's going to have that chart of accounts on there. It's going to have a couple of other worksheets, but we'll get into that. So now let's talk about accounts, okay, like a bank account. So when we need a clearinghouse to process our transactions. Okay, so we need a method to take all of those deposits, checks, bills, everything, and we need a way to process them, and we do that through accounts. Okay, so now accounts really serve two purposes, and I'm going to give you an example. Obviously, a bank account is an account. Okay, also a credit card is an account, and I'm going to show you why and how. The accounts are where we process our transactions through. Okay, so they're an account, but they're also a category. Okay, so accounts really have like this special dual purpose. So in other words, if I am going to pay my credit card bill, I'm really using two accounts and two categories. Okay, they're both on the chart of accounts, but they're both clearinghouses. So I'm going to show you here my friend Jim, and this is going to from two different aspects. So Jim pays me $5,000 for my accounting fees. So the way that if we're using a manual system, we're going to have what we call a disbursements journal. Okay, so the account is the operating account. So in other words, this is our clearinghouse for all these transactions. So now remember I said there were like, I think 6 bits of information. This is one of them. The date is another one. The payee, the amount, and the category. Okay, so now a normal disbursements journal, all it would be is a bunch of more columns going out. So we might have rent, supplies. So I just wanted to make this simple for you. So you have, this is how it's recorded. So every account, it's going to have its own journals. Now on my end, I'm recording it in a cash receipts journal. And you could see I still have the same amount of information. And this is just the same transaction from two different standpoints. One is from the payee and one is the payor. Okay, so like I said, bank accounts, accounts are not always just bank accounts. They can be a credit card account. So even though it's a credit card, it's still a disbursements journal. If I'm confusing you, let me know either by chat or that you can take off your mute. And there's other kinds of accounts. PayPal is an account, believe it or not. Millions, I can't say millions, but hundreds of thousands of new businesses are being created now because companies like PayPal and eBay are issuing 1099s. Okay, people never realized that PayPal was actually an account. PayPal is just like a bank account. You're clearing transactions through it. Okay, so you can't take, if like I do business through PayPal, so what happens is I bill somebody $100 and PayPal takes off $5 for fees. I can't take that $95 and put it into my bank account and say, oh, I just made $95. There's something missing there. What's missing is the fact that I actually made $100 and I spent $5 in fees, and those transactions all have to be recorded. Okay? Petty cash is an account. I have all of my clients set up with a petty cash account. Okay, and we use the petty cash just like a regular bank account. If you ever have done barter, that's another account that has to be accounted for. Okay, if you want true books and records, you need to clear all of your transactions through these accounts. Now I'm going to tell you something that's really not a secret, but I actually keep 2 sets of books and it's legal. Okay, it's called cash basis and accrual basis. Now the difference is that we add two more accounts, accounts receivable and accounts payable. Those are also accounts the same as a bank account, a PayPal account, a petty cash fund. Now, what accounts receivable and accounts payable do is they change your accounting method from a strictly cash basis into what we call accrual basis. Okay. Now, accrual basis is a truer accounting of where your business stands. That's what I want to see as an accountant. I don't want to see just your cash. If you got people that owe you money or you owe money, that's part of the accounting equation. Okay. Most small businesses are on a cash basis for tax purposes, and probably most small businesses don't even have accounts receivable and probably very little accounts payable. But the point here is that if you do have these, those have to be reflected on your books. Okay, and a good accountant is going to, a good tax accountant is going to put you on the best tax strategy for you. Okay. If there's any questions, let me know. I know that I'm going fast here, but we got a lot of stuff to cover. I'm going to get into now entering transactions. Okay, and words are very important because, you know, for a long time people have been saying I need a bookkeeping system, or I'm going to create a bookkeeping system. You need a good bookkeeping system. The truth is, when I looked at this, I found out that the definition of a system is, it could be anything. In other words, if you throw all your receipts into a garbage bag and you bring them to your accountant, that's your system. So I thought of a bunch of different systems that people have. We have the organized chaos system, the garbage bag system. One of the best is the procrastination system, or the ignore system, which causes a lot of problems that I have to solve. The bank statement system and the other systems. What's more appropriate, what I found, is this word called process. Okay, because a process has an end in mind. In other words, a system is anything that you're using. Everybody has a system, and usually it's not a great system. What we want to develop is a process, and the end in mind. You know, if you've ever heard of, you know, we begin with the end in mind. What we want to accomplish here are clean, accurate, timely financial reports. So now again, just like with the transactions, I could identify there are only 5 business process cycles. Okay? There are only 5 types of things that every business will go get into. If you could think of another one, let me know. But in 30 years of accounting, I can only think of 5. Now, what this means, if you think about it, there's only 5 different business process cycles. There's only 5 or 6 bits of information we need for every transaction. Okay? All of these transactions go into a category. It's like a puzzle, okay? But it's a manageable puzzle, because what we can do is we can identify where everything is supposed to go before we even do the transaction. In other words, a good bookkeeping system is planned out. It's not, oh, I have this expense, I don't know where it goes or what to do with it. No, that's not good business. All of this can be planned out and systematized into a very logical, seamless process, because we already know what we're going to do. Okay, so let's go through these. Let's start at the bottom. Every business has disbursements. We all have money going out. Hopefully, you have money coming in. We call this cash receipts and cash disbursements. And let me tell you something. I found out that probably over 90% of the businesses out there, this is all they ever have. There is no payroll, there are no purchases, and there are no sales. So this is how easy it could be. This was my ice cream truck bookkeeping system. I only had to worry about two different processes, money coming in and money going out. Okay, now if you incorporate or you start getting bigger, you're going to have a payroll. You need to have a system for recording your payroll. You need to have a system for recording your receipts. Now, if you do business where you buy something and you pay for it later, or you sell something and you get paid later, you need a sales process and a purchase process. Guess what? These are all your journals. So I'm going to take you through one of the sales cycle. Okay, so we have a sale. Grandma sells cakes at the church. She gets paid, and then we deposit it. 3 steps. So as you create your bookkeeping process, you have to identify the 3 steps. And now remember what I said about documentation. We need to identify the steps and create a document that becomes the story of our business. Okay, so grandma sells a cake. She produces an invoice. Okay. Here, you bought a cake. Now grandma gets paid. We give them a receipt because it's in cash. Just because it's in cash doesn't mean we don't need a document. You definitely need a document. And then we deposit it. So now all of these documents are going to flow through your bookkeeping system. Okay, so whether you're doing the bookkeeping or you have an accountant or a bookkeeper doing it, it doesn't matter. But what you can create here is a seamless process. So guess what? If you're in the baking business, you don't actually have to be at the church or take the money to the bank to record this in your bookkeeping system. All you need are these documents. Okay? So now let's look at another angle. We have sales that are done in 3 different ways. Somebody pays us at the cash register. We produce a sales invoice. So what I'm doing is I'm thinking ahead. I'm saying, okay, I'm going to have a sale. How am I going to have these sales? Somebody can pay me cash. I need a sales invoice. Somebody can pay me by check. I still need a sales invoice. Guess what? Somebody buys this and pays me later. I still need you need one document to cover all these different scenarios. So now we get the documents and we want to record them. So I talked about a disbursements journal. I remember I said, well, you know, all the disbursements journal is a bunch of other columns. So now there's no column here for check numbers because everything I did was in cash. Now thinking back, I probably would have been better off if I had a petty cash receipts journal, a disbursements journal that were numbered. Okay, I've set up petty cash systems where I actually caught people stealing because I had a number system. Okay. So now what happens is we total everything up, and if you're doing a manual system, we do this by the month, and we post it to what we call a general ledger, and I'm going to get into that in the, I think in chapter 10, where I talk about the different financial reports. So here's the process. What we need to get is the date, the amount. These are the 6 items that we need to document for every transaction. Okay. So what I'm trying to show you here is that you could have a business, and as long as you have a document procedure for recording your transactions, you could have somebody else actually consummating your transactions. Okay, this is how you scale a business. This is how you grow a business. Okay, so now I have a, now this is part of your text. I actually have a form that I developed, but these are all the questions that you have to answer when you set up your bookkeeping system. Okay, we don't have to go through each one because I've already talked about it, but these are all the questions. Now, if you answer all of these questions for every transaction, you're going to have a bookkeeping system. So let's talk, we only have a couple of minutes. Are you guys okay? Can you go for another like 5 or 10 minutes?
Yeah, that's fine.
Okay.
Yes.
Okay. So now, if you're going to have a system that you can rely on, you need some kind of controls. Okay, and the simplest accounting control is a simple bank rec. Okay. And not just a bank rec, but we also reconcile credit card transactions and all of those accounts that we talked about, they all need to be reconciled. Okay, so now the question is, how often should you reconcile? And that depends really on how big your business is. For my clients, we do it at least every week. Okay, because we found that it's easier to reconcile every week. We have online access to the information, and we find mistakes a lot easier. So we reconcile every week, but you shouldn't go more than a month without reconciling. And now, if you don't know what a bank rec is, I'm sure that if you've never done this, you can look at a bank statement and they have a worksheet. But it's a very simple, what we're doing is we're checking our book balance and we're comparing it to what went through the bank. Okay, so now this is a control because as we do this, we're finding, number one, transactions that were never recorded, like bank charges, or maybe there was a cash withdrawal that somebody forgot about. Okay, maybe there was a check written for $100 and it cleared for $1,000. That happens. But most important, this is what I like to do with this. You can't just do a bank rec. You got to then look at it, and what you want to look for are checks that haven't cleared in a couple of months. Okay, because that throws everything off. If a check hasn't cleared in a while, then it's not really a transaction. It's affected your cash balance. It's affected your expenses. So you want to identify those old transactions. And deposits, if I get a deposit in the bank that hasn't made it to the bank within a week, then I've got a problem. Okay. Other accounts, like I said, that all of them need to be reconciled. Anything that you designate as an account, a credit card, a PayPal, if you're doing barter, even petty cash, all need to be reconciled. Now, there's a couple of other accounting controls. Containment. What I mean by containment is that you don't have any outside transactions. We call them off-balance sheet transactions. In other words, you don't have another bank account, like let's say you have a personal account and you decide to start doing business through your personal account. You have a hole in your bookkeeping system then. You want to have a system where everything, all your transactions are going through the accounts that are part of your chart of accounts. You want to centralize everything. Okay, you don't want, your receipts in one office and You want all your books and records to be centralized. Okay, so like for instance, QuickBooks has a nice feature where you can actually attach your documents to the transaction. Okay, that doesn't mean you still need a filing system, but I use it for some of my clients because it's really nice to be able to just go right there and see what the transaction is. When you get bigger, if you have a larger business, you need to separate some of your duties. You can't have the person that's billing your customers, sending out the invoices, and making the deposits. They can't all be the same person. That's when you see these articles in the newspaper that some bookkeeper stole $100,000. I look at that, I read between the lines, and I know exactly what happened. And the last control is you got to stay on top of this stuff. It's as simple as that. Okay, so that's the first 4 chapters. Chapter 5, we've already talked about this. I just want to cover this briefly. Books and records. They are all the documents, all the history that has to do with your business. Okay, every single receipt, every journal, anything that has to do with your business are books and records. Now that doesn't mean you want to throw them all into a box and bring them, if you get audited. They have to be organized and like I said, tell the story of your business. Now there's rules as far as what you need to keep and how long, and I'm not going to go into that, but I did give you that information in your text, and also this publication 583 has the information. But the last thing I want to talk about is something that most people don't know about, and I think that you'll love me for this because it's called a de minimis rule. And what that means is when a transaction is under a certain amount, you don't need to keep the taxi cab receipt. Okay? You don't need to keep that receipt when you go through the cash aisle for the tolls. What you need to do is you need to document it. There's a difference. So the way you document it, okay, so the cutoff point now, it used to be $25, now it's about $75, but it really depends on the volume of your business and the volume of your transactions. But pretty much, I use $75 as a rule of thumb. So now if I go to the post office and I buy $42 worth of stamps and I pay cash for that, all I need to do is record it in my petty cash journal. Okay, they call this the de minimis rule, and it came from this entertainer way back in the prehistoric age. This guy George Cohan traveled all over the country as an entertainer, and he kept no receipts. The IRS audited him and disallowed all of his deductions. And he went to court, and the law is that you have to be able to prove your deductions. So it was obvious that this guy traveled all over the country. He had his calendar, okay, and he had to pay his hotel bill, and he had to eat, and he had to buy stuff for his so the court said, you know what, he has documentation. It's just not the kind of documentation that he should have had, so we're going to allow all of these deductions, and it became known as the Cohan rule. So if you're in I don't know any business that doesn't deal with cash. You just can't get away from it, okay? There's a lot less of it now, but what I do is I set all of my clients up with a petty cash journal. And as long as you document, if you go back to those disbursements journals, if you document those 6 items and you put them into a ledger, that is your documentation. So that's it for today's class. I hope I didn't go too fast. I probably did, but we have the recording. So are there any questions?
Nope.
No questions. All right.
Nope.
So like I said, if you have anything between now and Wednesday, let me know. And I appreciate you attending the Bedrock Bookkeepers Do-It-Yourself bookkeeping class. Have a good day.
Thank you,
Thank
Joe.
you, Joe.